Hi, I'm Scott Olson, co-founder of LTCshop.com and author of Long-Term Care Insurance Now. TheStreet.com is a leading personal finance and investment website. And recently, they asked ChatGPT this question. They said, ChatGPT, how would I go about deciding whether to purchase a standalone long-term care insurance policy versus a hybrid long-term care annuity or a hybrid long-term care life insurance policy? They decided to ask a long-term care insurance expert, me, to respond to ChatGPT's answer line by line. After reading ChatGPT's answer, I feel confident that AI will not replace me anytime soon. As with most things in life, what is not said is often what matters the most. ChatGPT's analysis had 7 critical omissions. Number 5, another huge omission. ChatGPT failed to give any real costs. How can a decision be made about which type of policy is better when costs are not even discussed? So here are some real costs to consider. A married male, age 60, no tobacco use, can buy a hybrid that meets all the requirements. It's guaranteed to remain in force to age 120. The long-term care benefits are 3 to 4 times the death benefit. The long-term care benefits are guaranteed to grow every year by at least 3%. And the long-term care rider is a 7702B rider. By age 85, this 60-year-old male would have a monthly benefit of $10,469. And the long-term care benefit would be guaranteed to be $753,797. The one-time premium payment for this hybrid would be $69,300. A traditional long-term care insurance policy with comparable long-term care benefits, no death benefit, just comparable long-term care benefits, would cost $2,731 per year. The 6th omission that ChatGPT had is that ChatGPT is unaware of a regulation that is helping to prevent long-term care insurance rate increases. It's called the Rate Stability Regulation. Traditional long-term care insurance policies purchased in 41 states are now protected by the Rate Stability Regulation. This regulation has removed the profit incentive from rate increases. It forces insurance companies to lower their profits if they seek a rate increase. Number 7, the 7th omission that ChatGPT had, I don't know what, but for some reason, ChatGPT doesn't know about long-term care partnership policies. These policies have been around for over 20 years. These are special long-term care insurance policies that can protect assets from Medicaid, even if the policy runs out of benefits. Now, normally, in order to qualify for Medicaid-funded long-term care, you need to spend your countable assets down to about $2,000. But those rules are changed for people who own long-term care partnership policies. If, for example, someone receives $500,000 of benefits from their long-term care partnership policy, well, they could apply for Medicaid-funded long-term care and they could keep $502,000 of countable assets. And those assets are even protected after the policyholder passes away, which benefits the policyholder's heirs. Hybrid policies do not qualify for this special asset protection. ChatGPT did get a few things right, I'll be fair. It did say a standalone long-term care policy generally provides the most robust coverage per premium dollar. Right on, ChatGPT. They also said hybrid policies tend to be less efficient insurance vehicles. That is correct. With a hybrid, ChatGPT continued, you'll usually pay more upfront for less LTC coverage. That is correct. ChatGPT also commented on how standalone or traditional long-term care insurance policies have more benefit choices, which allow for more tailored policy designs. Also, ChatGPT mentioned that premiums for standalone long-term care insurance policies may be tax deductible within age-based limits. That's all true. Way to go, ChatGPT. But ChatGPT got a lot of other things wrong. ChatGPT says hybrid premiums are guaranteed not to increase. Well, again, as I stated, most hybrids do not have this guarantee. A few of the best hybrids have that guarantee, but most hybrids purchased today are not guaranteed level premiums. ChatGPT also says if you're considering liquidity and control, standalone LTC may not be the best option. Hybrid long-term care policies maintain some liquidity. This statement is absurd. ChatGPT is saying that a traditional long-term care insurance policy is less liquid than a hybrid? Consider the example I gave above. The 60-year-old male can put a one-time premium of $69,300 into a hybrid. Or he could keep his $69,300 in a high-yield savings account. If his high-yield savings account earns 4% per year, well, he can take that interest and pay his annual long-term care insurance premium. The $69,300 in his high-yield savings account is fully liquid. It's his. The $69,000 in the hybrid is not. It's subject to surrender charges. ChatGPT also says, if you want to preserve or transfer wealth, a hybrid policy may appeal more. Pardon me. Give me a break. You've got to be kidding me. Hybrids should not be purchased for transferring wealth for these reasons. With a hybrid, the death benefit is wiped out if care is needed for 25 months. The death benefit is only slightly higher than the total premiums paid. In other words, it's very expensive life insurance. So to transfer wealth, it's better to buy a life insurance policy separate from a long-term care insurance policy. This way, if care is needed, the death benefit is not depleted. ChatGPT also said, if you dislike the use it or lose it nature of traditional long-term care insurance, a hybrid policy may appeal more. Again, hybrids are if you use it, you will lose it policies. As stated, if long-term care is needed for 25 months, the hybrid's death benefit is wiped out. Looking at the prior example, if the 60-year-old male needs care, he still keeps $69,300 in his high-yield savings account. If he had a hybrid, he would lose the $69,300 if care was needed for 25 months. ChatGPT also says you're paying solely for coverage. If you never need care, you get no benefit. This is a feature, not a flaw in traditional long-term care insurance. With traditional long-term care insurance, you're not paying extra premium for a death benefit that you may never get. ChatGPT also says, well, hybrids are typically capped LTC benefits, often 2 to 4 times the policy's cash value or death benefit. That is wrong. Most hybrids have long-term care benefits that are less than the death benefit. Only a handful of the very best hybrids have long-term care benefits that are 2 times, 3 times, 4 times the death benefit. ChatGPT says hybrid policies don't offer deductible premiums. You got to be kidding me. Wrong again. The best hybrids do have tax-deductible premiums. That's one reason why the 7702B rider is important. The best hybrid policies have a 7702B rider, and that rider and the premium associated with it can be tax-deductible.